Now, the market, of course, remains under pressure. But let's talk about new initiatives by the government and encouraging newer industries right from the sort of ground up. A recent forecast from Gartner suggests that global semiconductor revenue is projected to grow at more than 16% in 2024 to 600 plus. Now, India is seeking foreign investments for its own indigenous semiconductor industry for the development and design across the value chain. To discuss our prospects in the space, we have Vipraw Srivastava, research analyst at Incred Equities, and Ankush Wadhera, managing director and partner at Boston Consulting Group, BCG. Gentlemen, good morning. Great to have both of you here. Appreciate your time. Ankush, if I can start with you. You're following these developments closely in terms of what the government is trying to do, the announcements that we have, commitments that we have rather from companies to enter this value chain. Where are we looking to break into this semiconductor value chain? Is it largely on the side of chip assembly, etc.? Is it at a more fundamental level? And what do you make of our prospects?
Sure. Good morning, everyone. Firstly, thank you for having me with you this morning. Before I answer that question, if you allow, I just want to encourage us to look at the India semiconductor opportunity in perspective of what is happening around us in the new world order. You mentioned supply chains. How new supply chains are being created in a post-COVID new normal, where the China plus one strategy is being adopted by many countries, and that provides India with an unprecedented opportunity. And two, how it is impacting the electronics space in India. When we look at just the electronics manufacturing sector in India, this was a $30 billion industry last year and should grow 10x in the next 6 to 7 years. And a lot of this growth is going to come from areas like electric vehicles, batteries, mobile phones, wearables, etc. Within this, the semicon opportunity in India will be over 110 billion by 2030. And when you talk about value chains, I think it is important to understand that today, more than 99% of the semiconductor demand in the country is being fulfilled by imports. We had over $20 billion of direct chip imports in 22, and we are the fourth largest semicon importers by volume, and 40% of our demands are actually being met through China. So when you look at it in this context, the kind of investments that are coming in India are now coming in the core fab space. So a lot of manufacturing of the chips, starting from manufacturing to then testing, setting up of OSAT and ATMP facilities, and then further going down the value chain, leading to more robust supplies for the electronic manufacturing sector is what this scheme is looking to achieve.
So Ankush, very simply put, the first stage is designing, then is manufacturing, and then the last and the final stage would be where you test and package it, right? India is going to look at a play in manufacturing and even in the last step, which is OSAT, which is traditionally called as your, the packaging and the, testing phase. Is that correct? 2 out of 3?
Absolutely.
Okay.
And, we need to look at this in context of the fact that we have had we have been a design hub for the world, right? When you look at the prefab stage, we've always had, global giants working out of India like TI, ST Micro, NXP, Qualcomm, etc. So we were always designing for the world. Now is when we will start manufacturing for ourselves and for the world.
Vipraw, come in on this, right? First, tell us the key players in the Indian listed universe who stand to benefit from this semiconductor opportunities and the steps that they're taking, and how difficult, while the opportunity is there, what are the challenges that lie ahead?
Yeah, so basically, as far as players are concerned, we have companies like CG Power, which already has entered in the OSAT part in alliance with Renaissance, Star Microelectronics. And then obviously we had Cades. Then obviously the semiconductor ancillaries come into play, wherein we have companies like Linde, which can provide the chemical gases required for cleaning of fabs. So that is obviously there. So these players are mainly in this space. Then also we have unlisted universe, Tata and all is there. But again, the important part is, as far as challenges is concerned, you have to also understand that the global OSAT industry is changing. So previously, a lot of R&D which used to happen in the foundry level, wherein when these chip foundry manufacturers like Intel or TSMC were doing a lot of R&D there. But now what's happening, that Moore's law is slowing down. Moore's law meaning the transistors will shrink every 2 years. That is slowing down. So now what's happening is these chip manufacturers are realizing that, and they are focusing a lot of their research on OSAT parts. So if you look at last year numbers, the capex which TSMC, Intel, and Samsung is doing in the OSAT part, it's even higher than OSAT market leaders like ACE and Amkor. So that is making it difficult. In OSAT, we also have two technicalities, traditional packaging and advanced packaging. India will most probably enter traditional packaging. That market is slowly stagnating around 2%. But then from India's perspective, we have to start somewhere. That is fine. But the real growth where the AI boom is coming, these NVIDIA chips which needs to be assembled, that is coming in advanced packaging. And that market should grow around 12-13% CAGR from this year. So that is important. India's main value add would be this transition from traditional to advanced. The quicker this transition happens, the better we'll be in terms of semiconductor value chain. Because ultimately in traditional packaging, you have to realize that historically players from Malaysia and Taiwan have not created much value. The real value creation lies in the advanced packaging. And that is important for India, the quicker we transition from traditional to advanced.
Ankush, sort of you want to weigh in? Interesting points there from Vipraw on some of the points he made, advanced and traditional packaging. Also, that point that you earlier made, Ankush, about designing, a lot of it happening actually already in India. So you're saying that a lot of the lithography works happens here and happens out of India? Already?
No, so let me answer this in two parts, right?
Yeah.
One, I think on what Vipraw was sharing on the packaging side, see, the technology will continue to evolve, right? The ATMP space is going to become far more attractive and lucrative than traditional OSAT. That is absolutely fine when you look at things at an absolute level. But when you look at things with respect to our needs as a nation, where we are striving and striding towards Atmanirbharta and self-reliance, there is still significant demand that we will have locally that will need to be met even on traditional packaging. So it is, it's not to say that we should do only the new age stuff and not do what has been legacy. I think we will need to strike that right balance between doing a little bit of both, of course, with an eye on the future. To your second question on the design side, there is a lot of fabless design that has been happening in India. So, before you actually get onto the fab and onto the lithographer, there's a lot of fabless design that needs to happen. And that is what, companies have been doing in India for over 2.5-3 decades. I remember, in late 90s after I graduated, there again, some of these players like SP, Micro, etc. were some of the biggest employers for talent. So till CapEx was not required, a lot of design was happening in India. With this move that the India Semiconductor Mission has made, a lot of manufacturing facilities get set up, and we start capturing the core part of the silicon and the compound silicon manufacturing part of that value chain. And that's going to be very, very important and exciting for India.
Vipraw, since you mentioned a few names, have you looked at where they're trading, what they're pricing in, and from a here and now investor perspective, does it, do they offer any attractive entry points, or what are they pricing in, some of these names?
Gains hasn't got approval till now. So let's talk about CG Power. So there are two ways to look at it. One, is an investment good for the country, and whether the investment is good for, as an investor, is it good for the company? So what you have to understand very clearly is that for CG Power and for other OSAT players, if they get approval in future, government subsidy is a must. Why do I say this? Because ultimately, globally also, we do not have anything in future, but historically, if you look at all these companies, they have created ROC lesser than cost of capital. That is very important to look at. So ideally, X of subsidies, obviously. So ideally, going ahead, CG Power has tied up with Renesas. So we have done our own internal analysis. So their investment should be close to around 7,800 crores. So ideally, it should top line asset turns in this industry is 0.6, 0.7. So 3,000, 4,000 crore could be a top line generator. And obviously, in terms of margins, we are comparable with Penang in Malaysia. So power cost, we are cheaper than them because of the subsidies by the government of Gujarat. And then obviously in terms of labor, we are cheaper than Malaysia. So ideally, as a company, as a CG Power can gain good margins. Malaysian firms make north of 30% margins. So obviously they can make close to that. The issue is top line. What I feel is that going ahead, because the lower end is highly commoditized, and it's a lot of pricing pressure is there. So what I feel, if it's a good investment for CG Power, ideally, first of all, imports must be protected. I mean, you can't have imports coming in India from China because in initial years, we won't be price competitive with them. And secondly, what's very important is that in the fabs must come more to India, because geographically, if you observe, if you look at companies like ACE, which is the largest OSAT player, its facilities are stone's throw away from TSMC. That's what makes ACE special. So ideally, fabs must continue coming to India, and government must also realize that even if they invest a lot in fabs, I mean, out of the current outlay of 76,000 crores, more than half has gone in fabs only. Remaining has gone to Micron and CG Power. So even the government keeps investing in fabs, they can't forget OSAT. OSAT has to chug along in terms of subsidies. Then only it will be a good investment for CG Power and for other companies in future which might come in this space. So yeah.
Okay, gentlemen, great conversation. There's so much more to discuss, but we're out of time. Vipraw, Ankush, thank you very much for joining in. With that, it's a wrap on Bazaar from the entire team. Thank you for watching. Chartbusters up next.